Hello and welcome to FX Addicts Weekly Market Analysis. This is Tim the Currency Professor, and today is Friday, September 13th, 2013. So for all you superstitious people out there, it's the Friday the 13th of the 13th year. So extra special there. Economically, we had a few reports out today that made a little bit of a difference. Out of Japan, industrial production, the revision from 2 weeks ago, 3.4%, a little bit higher than the originally reported 3.2. And in the U.S., the retail sales came in, both the core amount and the full amount came in lower than expectations. The core amount up 0.1%, lowest we've seen in a while, and also the full one up 0.2%. Both of those were expected to be up 0.3 and 0.4 respectively. And then also University of Michigan consumer sentiment number 76.8. That's the lowest we've been since the spring, and expectations were for 82 even, so we've seen a little bit of fall off there. We'll see what that gets revised to in 2 weeks, so the revision could be a little bit better. Next week, a full docket of info. And the big news next week, of course, is the FOMC meeting, and they're supposed to give some sort of guidance on their tapering. Monday, though, we have Empire State Manufacturing Index out of the U.S., capacity utilization, and industrial production. None of those are expected to be anything big or stellar. So if it is dramatically different, then we could see some movement. On Tuesday is UK's inflation numbers. Just about everything inflation related gets reported, and there really aren't any real surprises expected. The PPI is expected to be a little bit lower, the PPI input just a little bit lower than last month, but we'll see how it actually comes out, because a lot of times the estimates are off on those. Also in Europe on Tuesday, the zoo economic sentiment for both Germany and all of Europe, and those are not expected to see any big moves either, but they are supposed to be a little bit higher than last month. Then on Wednesday, building permits and housing starts in the U.S., pretty much about in line with last month's numbers, so if we see anything different than that, that could move the market. And then of course on Wednesday is the FOMC meeting and press conference, so that will be moving the markets. That's all scheduled to take place between 2 and 2:30 on New York time, so be cognizant of that. That will definitely move the markets. Coming up to, as well as during Bernanke's speech, and then the question and answer session afterwards. On Thursday, the Swiss National Bank monetary policy assessment, so we will see what they have to say, if anything. They're pretty much been status quo lately. Also on Thursday, current account out of the U.S., existing home sales, and the Philly Fed Manufacturing Index. None of these are supposed to be ecstatically stellar by any means. Lower numbers are expected, so see how they actually come out. If they come out quite positive, then we could see some market movement. And then on Friday, very slow day for economic data. Consumer confidence out of Europe expected to be just slightly better. All right, on to the technicals. Euro US dollar today up 7 pips right now. Not too much movement. We did have some downward momentum here early on in the session, but then recovered when the U.S. news came out that was disappointing. And if we look on the weeklies, we can see how this week, quite a strong week after 2 pretty good down weeks. So here we are bouncing back up. Now the question is, do we go and take out these highs, or do we sell off from here and get down to the lower end of the range around that 127.50 mark? On the monthlies, well, it looks like we got a little bit of upward bias going here, but we can see here it's just grinding higher when we look at the stochastics, and pricing wise we should have shot up here. We should have went up to around that 142, 143 area several months ago, and we didn't. So really not that good of a rally. Any type of rally we get is more or less a test of these old highs from about 8 months ago, and from there we would probably turn around. Pound dollar, another move up, up 75 today, pushing close to that 159 level, and looking like we're a little bit overbought at this point. Good correction would be in order, maybe even next week. And on the weeklies, we can see this week's movement here. Pretty strong day, or pretty strong week. So pushing ever closer to this this trend line up here, which is now about 159.25 area. So we could see us getting up there next week and then falling off from there. And on the monthlies, we can see we're almost right on it there, and we're very vulnerable now to a sell-off back down. So we got to be careful here. If we were to move higher out of this, and this would become the base, then we would need to close the month up here, which is about 164. We would need to get up in there and close there this month, the month of September, and then we could see October push up, and if we closed up here around the 170 mark, then that would be really a start of a new movement that would then take out this this huge sell-off that we had, negate any type of negative tone that we have to the market. U.S. dollar against the Swiss franc, down 15 now. We were up for most of the session, and then we've turned negative after the U.S. reports today. So we are still on this little bit of a sell-off point here, and more or less a correction. We've pretty well based out down in here, so that should hold. We could get down maybe into this area down in here around the 92.50 area, 92.40 area, and then see us move back up. So if we jump out here to the weeklies, we can see this week is going to be a negative week, and it's the first in the last three. So selling off just a little bit, really not that big of a deal. Again, we're building quite a good base in here. So we sell off, we test these lows, and then we're cleared to go higher. On the monthlies, we can see it's very, very small range so far this month. We're halfway through the month, and we're bumping right up on that trend line. That trend line goes back to 2000. So we need to clear that hurdle and then clear this hurdle that's up around 100, which goes back about just about 40 years on that one. U.S. dollar against Japanese yen, down again today, third day down in a row, down 34 pips right now, and back down under 100. We did pop up above 100 midweek this week, and then started selling off again. Technically here we look like we'll probably sell off for a little bit. We're making a little bit of a curved top here, so we could sell off a little bit, get down maybe to around the 98, 97.50 area, and find some support, and then move back up. So if we look out here on the weeklies, we can see we are above this trend line, but we do have a negative week here, so this could turn us around then, get us back down into this little triangle part, get us down to like around the lower end of the range, around 97.30 area. And if we look on the monthlies, we can see the same thing here, just a little bit of a retracement there, back down to that trend line and then back up. Jumping to the Euro Swiss, we've just been bouncing around now for quite a few weeks here, and right now we're down about 15 on the day, third day down. We are building quite a nice base here though. We got a nice bottom there, nice bottom here, and this bottom then was tested by these two. So we're just bouncing around kind of aimlessly here. We pull back, maybe we get down into this area here, which is down around the 123 mark. So we get down into there and probably bottom again and then bounce up. Longer term here on the weeklies, we can see how we're just really flatlining, and we do need to get up above that 125 mark and close up above that to really see some good momentum to carry us to new highs. Euro yen down again today, down 34 pips right now, back down to around 132. We did close up midweek here to some new highs, and up around 133, and then we have fallen back the last three sessions here. So really nothing more than a corrective phase, and it really looks like we're going to take off and go up considerably higher from here. So jumping out to the weeklies here, we can see how we're really consolidated, and we have this nice triangular pattern forming in here. We just need to close well up above that, which would be around 134 mark or so. If we could close up in there, then that would really turn this weekly around. And on the monthlies, well, same type of pattern here. We're forming a nice triangle, and that always leads us to believe that we're going to pop up. So we could pop up intra-month, jump up into that 137, 138 area, and then come falling back down. But we need to get up there to complete this pattern. US dollar against the Canadian, up slightly today, up about 15 pips. We have sold off about 200 pips in the last week and a half or so. So a little bounce like today is not really that big of a deal. So maybe we bounce up a little bit, fall back down, make another new low, and that would probably be it then, and we can rally back up. Now, if we jump out here to the weeklies, we can see how we're just on that trend line, but we have continually been building this momentum up in kind of a curved pattern, so we can see that good momentum really starting to gain ground here. And same on the monthlies, looking very good. Last 3 months ranges now, 4 months ranges, have been pretty much in the same price pattern area. So here we are down this month. We still got 2 weeks left, of course, so a lot can happen. So we could end up the month up near our highs, or maybe even at new highs. So that'll take us then up to a point at which we can then move forward quite rapidly. And really, we break out of this little pattern that we have right here. It would be nothing for us to jump to 110, 111 very quickly, in a matter of a few days or even a week. Australian against the US, we are forming what could be a bottom here. Today down about 22 pips, and we had a nice run up here for about a week and a half, 2 weeks, and now the last couple of days we've fallen back. So nothing more than what could be a minor correction. We got a nice double bottom in here, and looking technically, like if we can close above this, about the 94 level, that would really set things in motion for us to rally back up quite a bit. Now, if we go a little bit further out here, we can see on the weeklies, it's not really necessarily altogether true. As we look at these weekly patterns, we could be setting ourselves up to more consolidation than a sell-off. And if we jump out to the monthlies, well, we sold off so much, so here we are, a knee-jerk 1 month reaction back up. Is it a start of a new trend that would take us up, back up above 100, or is this setting us up just to fall in the next month or two? And that's a good question. As of right now, we really can't tell for sure, but it does look like we are forming somewhat of a base for a short-term rally. So maybe we get up to 95 area and then sell off. So this month and then next month up to around the 95 area and then sell off again. So we'll have to see how this month closes out. But longer term, it's still negative, it's still bearish. It's just right now we got a little bit of a correction going on here. That is it for this week. I am Tim Lucarelli, the currency professor sometimes referred to, and I am with FX Addicts. If you are not a member, you can become a member for free for 7 days. And if you ever have any questions or comments about currencies, or about trading, or about the website FX Addicts, please feel free to contact me. I am available by email, by Skype, or by phone. Thank you.